Hey guys, this is Michael over here, and today we're going to talk about investing. So the first thing I want to share about right now is why do you want to invest into properties? And before I start going into properties and convincing you that it's the greatest asset class out there, I want to start with the very first fundamental basics right now. So many people are actually asking at this moment right now, hey, why do I want to go into property investment when there's stocks and when there's shares, there's crypto, there's forex, there's even mutual trust, unit trust, REITs. There's so many things out there, and I feel that many people are getting very confused. So I decided that I'm going to do a very first episode over here. I decided to do an episode over here just to explain to you guys where does property sit and why do I want to go into property investments, or why should you go into property investments. Alright, so here you go. So when we talk about investments right now, we talk about asset classes. So I'm going to share with you right now what are type of asset classes in basic. So I'm just going to share with you a little bit of a basic staircase right now. So we call this the asset classes. And how I move this, okay, from asset classes to asset classes are basically something like this, right? You first start with the most fluid. The first fluid, the top over here, is things like money itself. So in terms of money itself, you can relate that to like something like forex. So can you invest into forex or foreign exchange? Yes, you can. Second thing you can go into is, which is, some of you know it's shares, some of you know it as stocks, alright, so you can go into stock investments, you can go into share investments, you can go into commodities. So what's commodities? Commodities are something like, some of you may not know this word. Oh yeah, you could put crypto somewhere here as well. And you can invest into crypto as well. Comes commodities. So what's in commodities is gold, something like gold, silver, you can go into crude oil, you can go into stuff like that. You can come to the next one over here, which is more fundamental, more basics, with things like unit trust, right? Mutual trust, funds, okay, unit trust funds. Then you come into property. So I'll put property somewhere a little bit lower in this line, and finally things like your fixed deposits, right? Which, and again, whoever does that, but some of you actually do this. So this will be my little bit of my staircase of what the asset classes are on there. So why do I rank them in this way? It's really because of this, right? People are asking me right now, why do I put them in this flow? It is because I am talking about the liquidity. So one of the things you got to ask yourself is, how smooth or how liquid can an asset investment be? The higher it is over here, the more liquid it is. It's just like money, right? If you want to go into forex, okay, well, forex exchange, basically you just have to have ringgit Malaysia. You go downstairs, you can go to any of the exchange centers and you can just trade it with US, and if US currency moves up the next day, you can take it and sell it back to ringgit. It's just as fluid as that. So this is how liquid it is. As you come to stocks and shares, yes, there's platforms, you can do it within minutes or seconds. And it comes down to gold and silver, a little bit harder. It's a little bit harder because it takes a little bit more time. And then with mutual funds and unit trusts, it takes weeks or days before you transact and exit into or enter into the funds. Properties will take you a bit much longer. Sometimes, depending on different countries, you can take anything from 1 month to 3 months. In Malaysia, you can take anything from 3 months to 6 months before you complete a transaction. There you go. So the more liquid to the more illiquid they are, these are basically the liquidity of what I call of each investment class. So as you can see right now, if you look into this, property doesn't actually sit at the most prime areas of an asset class right now. So the question you want to ask is then, Michael, why should I invest into properties? So I'm now going to share with you my reasons comparing this chart to some of the things I think are also more important than just liquidity and why I invest into properties. Alright? Here's my 4 reasons of why I pick property as my primary asset class investment. Alright, so here we go. So first things first is this, number 1, okay, we always talk about this right now, and the idea is this thing called ROI. So if those of you don't understand ROI, it's called return on investment. So basically it's counted in terms of percentage. Like, for example, how much returns can I get from forex? How much returns can I get from stocks, shares, mutual trusts, properties, or all? But wait, before I actually tell you what ROI is in terms of returns, like for example, you know about fixed deposits, right? If you go to any bank, you walk into it right now, they give you, oh, what's the returns if you park your money into the bank? They give you 2%, 3% per annum. So usually it's counted in a per annum. So this is per year. So that really give you some technical on this right now. But before I go into this, I'm going to share about one more very important tip when I come to selecting asset classes, right? And this is it. ROI is not just defined in one area. I want to share 2 more things. So for investors right now, especially you looking to it, ask yourself this next question when you talk about ROI. How does this come about, right? And I'm going to give you my biggest tip right now. Ready? Right? The answer is this. I look into two main things. The first thing is called cash flow, all right? And what this cash flow means is that how much consistent income does this asset class give me every single time? So for those of you who don't understand this, let me give you a couple of examples right now. When we talk about stocks and shares, we're talking about dividends, right? Dividends are something that you're given when a company performs well, makes profits, and they decided to then cut some of the profits away to give to their shareholders on a yearly basis. So you may want to look for companies that gives you dividends on a year-to-year basis, and they're very consistent about it. You talk about 10%, okay, 20%, well, they don't go up to 20%, but usually it's about 5 to 10% every single year. So that's what we call about cash flow, reoccurring income that comes into your pocket over and over again. So as an investor, you need to ask yourself, okay, which of these asset classes would give you the most consistent cash flow coming in over and over again? Right now, this is small money, but it comes in on a consistent basis. Well, maybe you're not that kind of person, right? You ask yourself, Michael, well, I like that, but it's a bit slow. You want something bigger, right? So the second thing I look for when I look into my asset classes is this, okay? And this is very important. The second ROI I'll get is this thing called capital. Capital appreciation or capital returns. I'm looking for the returns when I buy and sell. So I don't want to have that money coming in over and over again. I kind of want to have that excitement of buying at very low prices and selling it at a profit once it's appreciated in price. Now this will give you that huge income. However, you're trading it. You're actually like, say for example, buying stock A at a very low price and selling it at a higher price, hence returning it into a simple form of money again. So you're letting go of the stock in order for you to gain capital returns, right? But it's one-time figure coming in, like buying low, selling high. Forex, that's what you usually do. Or you can buy a house at a very low price and you sell it off and you benefit right off for it. But it's a one-time returns coming up from this, not reoccurring. And there are always pros and cons when you look into these two different forms. One is giving you that reoccurring consistent income, alright, slow and steady. One is it could be large benefits at short periods of time. How will you get your ROI? Will it come from cash flow or will it come from capital? Here's the answer I want to give you right now. I'm a little bit greedy right now, and why do I say this? I want kind of both, right? Because I'm kind of lazy. I don't want to go into an asset class whereby, you know, I can only get either one. So for example, ask yourself this, in Forex tradings right now, can you get cash flow coming out of it? The answer is no. It's a basic trade of buying and selling, and in between all that, you get your capital returns. So this is only one class. So let me just write this down now. Let me just give this as a CF, and this as a CA, right? So over here, you can have a CF, CA, sorry. Oops. Okay, that's a CA. There's no cash flow coming in. For stocks and shares, you can have either or, right? You can either have a cash flow coming in, you can look for stocks that give you this. You can go staking for this, and eventually, you will need to sell it off. So it's a CA. You can get both coming in. Commodities, gold and silver, usually over here, there's not much unless you can park it well. So a little bit of CF, but most of it is capital appreciation, right? You don't get a lot of dividends coming up from these kind of things. Mutual funds, this is a cash flow, okay? Properties gives you both cash flow and capital appreciation. You can get the rentals coming in while waiting for the price to shoot up, right? So you can get both coming from here. Fixed deposits, most of these are in cash flow. Okay, there's no capital appreciation right now. So as you can see, when you see the different asset classes right now, it gives you a clearer picture which one gives you what sort of performance and gives you a better decision which of it to invest into. Okay, so now that you've classified them, the next thing you're going to ask yourself right now is how much percentage returns each of them will give you, but that's another story for another day, right? So let's keep it simple right now. The second reason on why I would go into this, so let me just write this down right now. First is ROI. So that's one of the longest, toughest one I'm going to explain to you guys right now. But the second one I'm going to talk to you right now is something very similar, well, something very easy for you guys to learn right now is basically risk. Okay? So another thing to consider right now is now risk. Okay? So you have to now decide what your risk appetite is like when you enter into this market. And of course, what I would tend to say is that the higher it is in liquidity, the faster pace this is. So this will tie into the third thing called time. You see, the deal is this: the more liquid a investment class is, the more time you need to spend into it, because the transactions, the changes the frequency of changes react faster with shorter periods of time. Therefore, you need to observe the market more in order for you to benefit from it. And then there are times whereby you don't have the time to watch it, therefore you may lose some money. So therefore, your risk will increase as your time reduces. If you understand what I'm talking about right now, right? Of course, you can see from stocks and shares, they basically are traded on a 9 to 5 on a daily basis. We have even blocks of 1 to 2 minutes whereby you can start seeing transactions going very fast and very slow. You could even lose up to 30 to 40% of your tradings in a matter of just minutes, right? Same with Forex, same with crypto. As you go into gold and silver, it's a lot slower. It comes in for days, right? Mutual funds hardly moves, you're talking about months. Properties take you years. Fixed Ds, there's barely any movements, there's barely any risk over here, but of course the time gets longer. So what I'm going to try and share with you right now with this tool is this: what is your risk appetite? Because as you move more towards this side, your time increases, and with the increase of time, therefore there's a reduction of risk, right? So you have to now start thinking ROIs for how much you want, how much risk are you willing to take, and how much time you have to put in to reduce that risk. So finally, we come to the last one right now. This is my favorite, so I'm going to use a different color right now, okay? And the fourth one is this. So as you can see over here, why do I pick properties? It's very simple, because it both offer me cash flow and capital at the same time. I'm not a risk adverse person, not a person going to fix it. I kind of want more money than that. But you know, I don't want to put so much time into it, because when I first started property investment, I was working at that point. I want to get out of my job. So if you're like me right now, once upon a time, 10, 20 years ago, that you're stuck in a job or you're busy in your business and you don't really have a lot of time to watch the market every single day, or 24 hours or any midnight or more, you just want to put it there and make sure it grows on a consistent basis and you can predict it because you have enough time to do it. Maybe you want to consider something like properties, right? But the last reason that beats all three of this right now, and the reason why I went into properties is this: ask yourself this: which of this investment here would use the least amount of my money and get me the most amount of returns, right? And the only way how you're going to do that is this: by using somebody else's money. So ladies and gentlemen, the point here comes to the point of leverage. And leverage, my friends, is where I would say property beats it hands down. Now look, you can leverage by playing margins and futures in any of these commodities, in crypto, in stocks. But then when you exponentially increase by borrowing, okay, by 2 times, 3 times your money, you also 2 times and 3 times your risk. So if you're a person who wants to go into full-time trading every day and you know you're ready to prepare to watch every single minute and benefit from it, then fine. By all means, use this in any of the other assets. But for me, what I want to do is this: I want to 10 times, right, my investment capitals and still have a good night's sleep. Right, so this is the reasons why I pick properties, because I can leverage on it. I can use the bank's money. I can borrow for a long period of time. I can give a very good, I can get a very good interest rate, and I can get a very good installment onto it. I can cover it using the rentals coming in. I can sleep safely at night. I can see my asset class grow. So there you go, guys. All right. So this is one of the reasons why I pick property investments, because I have a little bit of a checklist over here that helped me decide which one I wanted to go in, especially when I had no time. So what happened was, when I understood all this, all I did was pick one asset class and I stuck to it. And I can tell you one thing right now, okay? Regardless of whatever asset class you pick, towards the end of the day, I always advocate this, right? You need to start today. Actually, the matter of fact is you need to start yesterday. What you need to do is you need to get started into investment. It doesn't matter any of these asset classes over here, so long it fulfills your appetite and you get started. I promise you, in a month, in 3 years, in 5 years time, you could get towards a potential area whereby you get out of your job, you get to financial success, and maybe eventually financial freedom. So there you go right now. What I'm going to do is I'm going to focus a lot onto this moving forward in many of my episodes, and I'm going to give you more lessons into it. But This is one of the reasons why I picked property as my asset class, and I'm going to give you more skills, more knowledge to come in. Now, if you like what you hear right now, please do click the subscribe button at the bottom and subscribe to my channel so you can learn a lot more and get successful in property investments.